We talked about in the Facebook room yesterday, Takeda is up because ARK Funds is buying it. And so with ARK Funds buying it, I'm pretty sure that's showing us who that unusual option activity, who's doing that unusual option activity. So, I mean, for me, I'm bullish. I did actually own, I did have the strangle, but this morning I covered these and I'm just going bullish. And by the way, this may not be the right play, but it certainly feels like what I want to be doing. So that's why I decided I did have the strangle. I was long these and I just got out of them. I'm like, you know what, fuck it. I think the stock's going higher. I'm just going all in on the upside. I rolled out, I didn't roll anything actually. I'm in Feb, you can see. I'm long 70, and then I went out to July. I like this trade a lot. It gives us some more time. It puts us in the same strike as a lot of that unusual option activity. It gives us earnings, gives us time. So now that I see TAK moving, and also you'll notice yesterday the vol was 38%, so the vol is 3% higher as well. Now I'm just going to wait. Now I'm just going to chill. Is it better to buy stocks or is it better to buy stocks plus options? Jay, in your comment earlier that you think that you're trading too big, let me ask you a question. How much would you want to risk in a trade? So probabilistic thinking is thinking that whenever you make a trade, no one trade is better than another trade. So when we have ideas, an idea is an idea is an idea. It's like we own a restaurant and it's a Michelin star restaurant and we have 10 things on the menu. Which is the best? Well, they're all the best. We've gone through 200 different dishes in order to take out the 10 that have earned their way onto the menu. That's what we've done. We've sifted through 4,000 names to determine, the small few that we're willing to invest in. If that's the case, you really, really need to think of every investment the same. Not one is better than the other. That's probabilistic thinking. That's just making good decisions over time. Okay, so if you want to risk 5, and Jay says he wants to risk 5% of his overall portfolio, let's use the example that Jay has $50,000 account and is willing to risk $2,500 on TAK. We are building a position right now, and our opinion is we see nonstop unusual option activity on Takeda. We have, a strong hunch that it's ARK Investments. We know that ARK Investments is continuously building a position. So if we decide that, can we be bullish for this example? Because I want to be bullish. I don't really want the downside. So hopefully you're okay with us being bullish. So we want to risk $2,500 on TAK, bullish. What are some things we could do? What do you think? We have $2,500. We want to do a trade in Takeda right now. What's the plan? We're bullish. What do we want to do? And the overall play is if Takeda goes higher, we want to make money. And if Takeda goes lower, we've already decided that we're comfortable losing our investment. And this is the exercise I go through. I do it more in my head and it's more reactionary at this time. But before I get into a trade, I make I make a decision, what I'm comfortable risking, knowing that if I'm wrong, I'm going to lose. And what that does for me is it doesn't permit me to go over a certain level unless I make a conscious decision to break my rules and to go over a certain level. And that doesn't last long. Like, you can't just keep on doing that. You can't just keep breaking your rules. So risk 2500 and TAK, bullish. So the first thing, what I would do, either a long call or debit spread for 2,500 bucks. Okay. Buy calls for 1250, balance buy stocks is what I thought. Come on, play this game, guys. This is important. What would we do? We want to risk $2,500 on TAK. What's the best trade? What can we do? Okay. Buy 8 of the 21 calls, buy $2,500 worth of calls. Okay. Buy 8 of the 21 calls. 8, yeah, okay. So this is what I would do. This is how I look at it. When is Takeda's earnings? Oh, the PDUFA date and the earnings. PDUFA date's going to be, the earnings are coming up February 2nd, and then the PDUFA date. So I would look at Takeda like this. Now, are we doing technical analysis here? I don't know if we're doing technical analysis. I'm kind of just looking where the heck this thing has been. Yes, Adam. Yes, yes, yes. So if we just look at Takeda here, and take a step back, and I like to, think of these things as like a living, breathing being. Like I really, really do. Like it was valued at 31, it came off, got offered, rallied back up to this point, weak again, rallied back up to this point and failed, rallied up and failed. Now it's just hugging a 100 period moving average on a weekly. Now, I'm a big believer, and you guys have heard me say this on videos, that stocks don't like to stay around big numbers. So knowing that in 2018, trading 20 but kept failing, trading 20 kept failing, trading 20 failed, got its ass kicked, rallied back up, failed, rallied, failed, rallied, kind of failed. I feel like if we get above this, it's going to be strong, but really we want to get above that, right? We have not been above that 200 period moving average in a really long time. And the last time we were anywhere close to that was here. So when I say stocks don't like to stay around big numbers, look, stocks don't like to stay around big numbers. They just don't. It's something I strongly believe in. It's something that, I gain more and more confidence with that over the years. So if Takeda works out on the upside and the unusual option activity suggests that it moves, not just grinds higher because they're buying volatility. When you buy volatility, you're expecting an increase in movement. I would think that for this trade to really work out, it would have behavior very similar to this. Gets to these major levels, it hangs out there, and then it's gone. So that's about 21, right? 21, trade up there, maybe if it was to 25, that would be, really freaking awesome. I think that would kind of make sense. It gets us above here. It would show this kind of behavior. Fine. So back into it. My expectations are, I want to get over 20. I don't want just a grind higher. That's really not going to pay off that well. It'll pay off a little bit, but it's not going to pay off like a real move. So starting out today, I think it behooves us to be in July because we get earnings and we get that PDUFA date. The also really nice thing about Takeda is the vol. If we go and look at all the names that we follow, and we look at vol. Pretty fucking cheap, right? Takeda, right here. It's also what I like about Sallie Mae. Really, really, really cheap. What you'll also notice is all the stocks that have a lower implied volatility than SLM and Takeda also have a lower price as well. You don't really see that very much, these low price stocks with this such low volatility, especially with the VIX over 20, right? The VIX isn't trading 12, the VIX is over 20. Takeda is really freaking inexpensive. So if I'm going to go July, we talked about that 20 level. I do like these 20s, but I also like there's more leverage out here, right? If I buy these 20s and I buy 10 of them for $1,300, I'm pretty much getting long from 20. And really, I'm getting long about 390 shares. It's costing me $1,300 to get long 390 shares. As opposed to here, it'll cost me $400 to get long 1,000 shares. I would think a good trade right now, if I had $2,500 and I was starting this out, I would probably look to risk about $1,000, $800 to $1,000 to get involved. And then to do that, if I wanted to risk, say, $900, I would probably risk about 500 on the 20 strike, and then I would risk about 400 getting some more leverage on the 25s or 26s, but I would only do these for 45 cents. And if I go here, oh, these are fucking expensive. That's not, whoever did that is not a good trader. They don't know what they're doing. Did anybody do that? I hope that wasn't you. Too expensive. 45 cents down here is fine. 45 cents something here, but just don't pay up. But that's what I would do. I would break it off into $500 on the 20, and then I would buy something a little bit further up. For those, so good question. Thomas wants to wait until it gets above, until it crosses the 200 moving average before getting in. So Thomas, the problem with that is you are late to the party, because while we're all sitting here celebrating, perhaps covering our trade, we are looking for somebody to sell it to, and we can sell it to all the people that are just waiting around, waiting for confirmation that they're right to be in the trade, rather than anticipating where the trade's going to go. We want to anticipate to take advantage of leverage. If you want to wait, I personally think it's late to the party. It's just tough because you wait until it gets here, and then it drops here, and then it spikes back up. When do you get out? You get out right when it comes under. You just end up kind of chopping yourself up. We want to anticipate, and we want to anticipate, especially Takeda right now, because we know massive unusual option activity keeps coming in. How about a vertical spread giving tax call skew? So the reason why I would not want to do a vertical skew right now is because we're seeing unusual option activity, right? We know volatility is really inexpensive. We know that ARK Funds is buying this thing hand over fist. That's all in the public domain. I would rather, so look what I'm doing. I want you to do, I'm in my trade for a reason. It's very similar to, the NNDM, right? Long calls Now, to manage the trade, then I would look to do something up top. Then I might consider selling something here, but I'm selling something as a way to manage the position. With Takeda, and two, look at this, Val, 144. Takeda's vol is nothing. It's so cheap. So with vol so cheap, why do you want to sell vol? So a good time to do a vertical spread is when there's expensive vol, expensive flat skew. Yes, good job, Bell. So that's the key right here. Because vol is so cheap, it's like I think Pablo and I were talking about that in the Facebook room. The thing that makes this trade a no-brainer is the price of vol. Because otherwise, Takeda doesn't care about its earnings. It doesn't really move based upon earnings. The thing that makes this trade appetizing for us is that it's very, very, very inexpensive volatility. And inexpensive volatility gives you a lot more leverage. Okay. Does anybody have any additional questions about Takeda before I move on?